how does a SSAS help you reduce your corporation tax bills? Right, let's have a look at SSAS first. So SSAS stands for Small Self-Administered Pension Scheme, and SSAS has to be set up by an actively trading company. So what does this look like when you draw it out, which always helps everybody? So here we have your limited trading company. So it's active. And let's assume that the two directors are a husband and wife. The directors of the limited company, the husband and wife, having spoken to us, have decided that they want to set up a SSAS, which is a pension scheme of the company. It is not an individual contract. It is a occupational pension scheme, as it's technically known. But obviously what we're going to do is we are going to put the husband and wife in as the members, and they are also the member trustees. Great thing with SSAS is the members and the member trustees have complete control over what goes on inside SSAS, which is what we find a lot of our company directors absolutely love, compared to, say, other pension structures where you lose a lot of control. So, very simply, how does it help control your corporation tax bills? Well, contributions to a SSAS are an administration expense of the business and therefore tax deductible. Any contributions that you make to SSAS, of course, must pass the test that they are wholly and exclusively for the purpose of the business. For directors, this generally isn't a problem. So obviously what you've got with contributions from the company, and the great thing with company contributions is they are not related to the amount of PAYE that you take home. It's probably worth just explaining that. If you put personal contributions into a SSAS, or indeed any pension, you cannot put in more contribution than you are drawing as PAYE income, for example. So if your salary is 30,000, then the maximum that you can pay into pension in any 1 year is 30,000. Despite the allowance is 60,000. So personal contributions are related to your income. However, corporate contributions are not related to your income. So this is a huge benefit that you're going to get. So we have the limited company here. We've got the husband and wife. And let's just assume that we are just making contributions for the current tax year. The current annual allowance is £60,000 per person. So obviously if their company decides to put in a contribution for each director of 60,000, so that's times 2. So we end up with £120,000 being paid in by the company. That should be a tax deductible expense for the company. So reducing their corporation tax bill, which is, of course, payable 9 months after their year end. I think it's also worth just briefly touching on, you need to get the contribution into the SSAS before the company's year end. If you go over the year end, then obviously the contribution made will fall into the next trading period. It is, of course, possible to extend your trading period by up to 6 months, providing you haven't done that in the last 5 years. Speak to your accountant, they'll be able to help you with that particular aspect if you are running close to the company year end. I think you also need to be mindful that contributions also relate to the fiscal year, so the tax year, April to April. The maximum you can pay in any one fiscal year is £60,000. So you can be in an advantageous position. So let us say that your company year end is June, you set the SSAS up in January. You could potentially put in, for this particular example, £120,000 for the tax year in which you establish the SSAS, say in January, and then potentially you could put in another £120,000 in after the at the start of the new fiscal year, so any time after the 6th of April. So there is 1 year where you can potentially get 2 bites of the cherry with contributions. If the company makes £120,000 contribution, and assuming that they pay corporation tax at the 25% rate, then this is going to give you a corporation tax saving of £30,000. I'm sure that you would rather have that money in your pocket, or certainly in the company's pocket, than in the exchequers. So here we go. We've just added £60,000 to the SSAS for the husband and wife and reduced their corporation tax bill by £30,000 in the process. We, of course, would love to hear from you. How are you going to get your corporation tax bills down in this tax year? Please leave a comment below.
Book a call with us via the link in the description below. If on a mobile device, simply hit the More button under the video title and pick a convenient time to speak. Feel free to share this video with others that may benefit on WhatsApp or in other online groups or channels. Like, subscribe and hit the notification bell for lots more SSAS related content, and leave a comment if you found this video helpful. For more, visit onecrownpensions.com.